is trying to get back to work. Local governments are chartering flights and buses to bring back workers. Companies like Foxconn are offering cash bonuses to get workers back onto the assembly lines. Meanwhile, President Trump says the virus won't have any long-lasting effect, he believes, on the global economy.
We lost almost 1,000 points yesterday on the market, and that's something, you know, things like that happen where, and you have it in your business all the time, had nothing to do with you. It's an outside source that nobody would have ever predicted. If you go back 6 months or 3 months ago, nobody would have ever predicted. But let's see, I think it's going to be under control.
The president said it's going to be under control. James Sweeney is the chief economist at Credit Suisse. Why has the market, if you like, suddenly woken up to this over the last 48 hours?
I think it's the significant contagion that we've just seen in Korea and Iran. It's, you know, a number of countries where now we're seeing secondary outbreaks, which brings home the idea that this seems like it can happen anywhere.
But even though China, which is such an instrumental part of the global economy, didn't get that same reaction, do you think the market underestimated what was going on in China?
Yes. Yes, I think it did. China's 30% of manufacturing globally, and we know that Chinese manufacturing plunged in February.
So for the US market to have continued rising as it did over the last 5-6 weeks was a bit of a false dawn or false hope.
Well, what I was hearing from people was that they were saying, well, manufacturing slowdowns don't cause recessions, and central banks ease when you get those slowdowns, so things should be fine. And I think that was a little complacent.
OK, looking at your note, which you put out at the beginning of the month, so you're quite at liberty to say this does not now reflect your views. You say, we remain of the view that the drivers of final demand in developed economies will not be impaired by this shock. So we expect much stronger growth in the second half. Now, obviously, pullback is obviously going to be strong, the V shape. Yeah. But do you still stand by your view that major developed economies will not be impaired by this shock?
Well, in the near term, I mean, we are looking at potential contractions in economic activity in the euro area, in Japan. So I think we tweaked out a little bit already. In the United States, the labor market is not at the point of being disrupted by this. But of course, how much contagion we ultimately get is going to determine how much damage is done. So right now, everyone has to question their forecasts.
Right. And as you question it, I assume your risk is firmly on the downside here.
Yes, absolutely. I mean, this is not a shock that's similar to any one that we've had in many years.
Why not? I mean, I suppose SARS didn't really affect in the same way. H1N1 didn't really affect. But the traditional view on this, and we talked about this on this programme, is, you know, the classic, you go down very sharply, but when things get to normal, you go back up just as sharply. Yeah. You're probably not buying that at this time.
Well, actually, we may well get a V-shaped recovery in manufacturing, because when factories get shut off, eventually they get turned on. But that V stands for vacuous. I mean, that's not helpful. The question is how much damage is done when you're in that V. If factories aren't working...
Damage to what?
Damage to payments, defaults. How many households, how many businesses are not paying their bills right now because they couldn't get a part to finish a good and they couldn't sell the good? Often when you have that kind of damage, you're not going to see it for a few months, but the market can start to sniff it. And we're sniffing it now, and we know this disruption in Asia in particular is large, and based on the patterns of contagion, we know that it can travel.
I always choose my words carefully when dealing with these sort of stories, because one doesn't want to be alarmist.
Right.
But at the same time, one has to be a realist.
Right.
So was the arrival of clusters, community spread in Italy, a turning point in your view?
It was a turning point as a trigger for the market's performance, especially the equity market's performance. It didn't really give us new information relative to what was there before. And there's two stages of this. The first stage is really China's preventative measures shutting down parts of economic activity in order to stop contagion and the effects on economic data from that. That's what we're seeing now. The second stage depends on how much contagion we get. And the more contagion, the more prevention, perhaps the more panic. That's the real downside, and we have no idea whether we're going to have that. We have no idea whether this thing can go away in the spring, which some think could happen, but it's by no means an assured event.
The market seems to be telling us that that it doesn't believe we've got a handle on this, or the authorities have got a handle on this, or that there's a potential that's becoming into a reality, despite what the president said today.
This is a new disease. This is a new virus. It's not fully understood. And until it's fully understood, we're not going to have a sense of the contagion and the risks from it just yet. And I think it's that natural uncertainty, and we have to wait for the scientists to tell us some more.
Final thought, and I realise you're the chief economist, not the market strategist, but you're hearing what people are saying in trading rooms. To those who had wanted to get into the market, but the frothy prices of continual records had made it adverse.
Yes.
This could be a buying opportunity. I'm not suggesting, we like buying opportunities because of health pandemics, but, we are a business show. There will be people looking and saying, hang on, I can now get that stock 10% less than it was, and the fundamentals haven't changed. Am I right? Is that right?
Well, you can get it cheaper. I think the question is whether the fundamentals have changed. In the near term, they have certainly changed. In terms of consensus forecasts will be coming down. The question really is how V-shaped is that V, how much damage is done, and what is the path later in the year? And we're going to have to wait for the science on that.
Good to see you, sir. Thank you.
Thank you.
Thank you.